Now, according to data accessible up till 2013, foreign direct investment into Nigeria fell to $29.83 million in the second quarter of 2024, the lowest amount ever recorded. According to recent data on the most recent capital importation report, foreign direct investment decreased by 65.33% since the Naira lost over 40% of its value in the first half of 2024. Now, economists attributed the sharp decline in foreign direct investment to the currency's appreciation and the volatile foreign exchange market. Joining us now to discuss this further is Dr. Josh Bamfo, who is partner and head transfer pricing Anderson in Nigeria. It's great to have you on the show. Good morning to you.
Thanks for having
Mr. Bamfo.
me.
Most welcome. Let's begin with FDI dropping to $29.83 million. Now, this is a record low. What are the key factors contributing to this?
So clearly, before we can look at the factors, I think we need to appreciate how significant that drop is.
It really is.
If you look at the fact that, 29.8 million, should we average that for the whole year, we'll be making only about 120 million for the whole year. Compared to the fact that, the president actually went on a world tour, a roadshow, trying to make a case that Nigeria is a good investment destination for foreign direct investment, and talked about potential $30 billion, dollar pledge, of foreign direct investment. So this is a significant shortfall when you have those expectations. So there are a number of factors that we need to look at. Some of them are legacy problems. So they could have been the key reason for that sharp drop. So for example, we all know that when you look at the Nigerian economy, energy cost is one factor that investors look at before they make foreign direct investment. But that's a legacy problem. And the current government is in the process of trying to resolve that in terms of its supply. So it couldn't be that. The other factor will obviously be infrastructure deficit. We know that the gridlock at the ports, not sufficient roads, rail, these are all challenges that we've been facing for a while, so that couldn't be the problem. So the obvious one could be macroeconomic instability, especially when it comes to foreign exchange instability. Reason being that if I'm a foreign direct investor and I'm going to invest in a long-term project, I have to be able to predict with some level of certainty how I'm going to repatriate my returns. So if we've had 40%, depreciation over a 6-month period, and especially when you compare to when the current government took over June of 2023, at the time, even if you look at the power market, a dollar was equivalent to around 700 naira. Today, we are looking at a dollar at almost 1,700. So you cannot predict with any certainty the kind of returns you can repatriate in the form of dollars if we're to invest in Nigeria and earn your income in naira. So that is a big problem, and that could be one of the reasons why we've seen this huge drop. But apart from the foreign exchange market, there are two other markets that are of importance. The other one is the market for funds, and the price of that is interest rate. Even if I come and invest with dollar equity injection, for my day-to-day working capital needs, I might need to have some credit with a local bank. If my cost of borrowing is north of 30%, that actually eats into my profitability. So that will be a deterrent for a foreign direct investor to come in. Then you look at the other market for goods and services. Inflation rate is around 32.15% based on the most current data that we have. That means the purchasing power of the household sector has been actually eroded. That means that the ability to demand what we will call discretionary spending would go down. And so if I come and invest in, let's say, the consumer markets, and this is not a necessity per se, then that will be adversely affected. So the macroeconomic instability is the major cause for this sharp decline. Until we get the economy stable, the economy cannot grow. And I think the Forex instability is one major factor, in addition to the other prices, which is interest rate, which is going north. Monetary policy rate is around 27.25 now, and it's still likely to go up until we get inflation under control. And inflation is still above 30%. So these are the instabilities we are seeing in the economy that needs to be addressed for us to be another destination that investors will find attractive. Until then, we're going to have problems.
Yeah, certainly we will be having problems. But then let's stay a little bit more on how significant this drop is in relation to predictability, which you alluded to just now. My question is in regard to, could this have been anticipated in any way, especially when we're looking at the future? What more could happen?
Yeah, so really, I think for us to have predictability back, and for foreign direct investors to see that the risk profile in investing in Nigeria has actually decreased, The first thing, it should be a new policy sense of prioritization, especially when it comes to Central Bank of Nigeria, CBN.
Okay.
Inflation is a big problem, and the mandate of the Central Bank of Nigeria is to curb inflation. One of the tools available to CBN is the monetary policy rate, because they can pretty much increase the monetary policy rate, which is the interest rate at which they charge banks for overnight loans. So once they do that, it becomes a benchmark for other interest rates. And what then happens is that it curbs demand and hopefully, represses the inflation. Unfortunately, that policy has an adverse impact on the real economy, because when the cost of borrowing goes up, businesses do not expand because cost of borrowing is too high. So it comes at a huge cost. Where there hasn't been the necessary focus for me is the achievement of exchange rate stability. In fact, it shouldn't be a case of just stabilizing it. It should be a case of crushing it. Why am I saying so? If you look at the inflation today, it's more of a supply side issue than a demand side. But the focus has been on the demand side. If you look at the data, food inflation is around 37.25. Headline inflation is around 32.15. So what is actually pushing the headline inflation up is food inflation. And what are the costs of food inflation? One is output has declined when it comes to agricultural products, in part because of insecurity in the farmlands. So that's a fiscal policy issue that has to be addressed. Government has to spend so much in that area to deal with the insecurity issue. The other bit is the supply chain. How do you get the output to the urban cities? Transportation costs, and that is affected by fuel prices. What are the factors that are actually driving fuel prices? Yeah, we talk about removal of subsidies, but most importantly is exchange rate. Because we actually, we have crude, we export it, then we import fuel products. Anytime there's a depreciation of the exchange rate, the fuel price goes up. Now, today, we know that fuel prices are going up in part due to geopolitical tensions in the Middle East. If you then add that the fact that our exchange rate keeps depreciating, then the price of fuel at the pumps is going to go up. And that's going to affect agricultural products that come to the urban cities. So I think there should be a renewed focus on stabilizing exchange rate, because it actually will help reduce, stabilize inflation. And it's only when inflation goes down that the Central Bank of Nigeria will start reducing, interest rates, which will actually augur well for production and the real economy. So I think the excessive focus on interest rate hikes to curb inflation, I think is a bit misplaced. We need to also focus on achieving exchange rate stability. The question is, how do you do that? And to do that, we know that even though exchange rate has depreciated over time, you would have expected that it will price out people who really cannot afford, the exchange rate at the high price. So at some point, demand for exchange rate, Forex should have gone down. But that's not the case. As depreciation goes up, we see central bank supply more Forex, but there's an equal balanced demand for it. Why is that the case? It's for speculative activities. Individuals who have excess Naira will rather buy dollars, store it, knowing that the Naira is going to depreciate, and they make money off it. Government officials that get access to excess Naira will also demand dollars. So really, you cannot price out those people from the foreign exchange market because they have excess supply of Naira. The only way they can stop their speculative activities is when the price crashes. So your strategy should be to target some band lower to crash it and then take out the speculative demand. That's the only way we can have a stable exchange rate over time. But there's so much emphasis on just hiking monetary policy rate to solve the inflation problem.
So you see misplaced priorities
I
here.
see it that way.
And for that reason, we are pretty much sailing on very choppy waters at the moment, it appears. But, we have very little time left. Could you just tell me what specific industries would you say, in your opinion, have been most adversely, affected by the FDI decline and Forex crisis as well? I
think the biggest one has to be the consumer markets. Nigeria is seen as a big market. That is our competitive advantage across Africa. Over 200 million people. Purchasing power is high. Now, in the consumer market space, this is large volume business with low margins. They make their money based on being able to supply so much in terms of volume, but the margins are so small. So anytime you have, Forex volatility that leads to foreign exchange losses, it eats into those margins. That's the reason why we are not only seeing a drop in foreign direct investment, we are seeing foreign investors leave the country. The likes of GSK, the likes of, there are a number of firms that are actually, some have divested out, Guinness, if you look at Diageo, So there's so many, Procter & Gamble, So these are large multinational enterprises that were supposed to create a lot of jobs for the young people and blue-collar jobs for other people, but they've actually left our shores because of this instability of Forex. So I think that is one sector that has been most hurt, the trade and the manufacturing sectors.
All right, but do you see a silver lining in a couple of words, ultimately?
Ultimately, I'm excited about the fact that, there's a policy coming in, which is the Economic Stabilization Bill. Hopefully they pass that. And in there, one of the key goals is to strengthen the Naira. I hope that the CBN will work closely with them to achieve that, because that would actually be a saving grace for us. All
right, so we wrap up on an optimistic note. I've been chatting with Dr. Josh Bamfo, who is partner and head transfer pricing and Nigeria. Many thanks for joining the show. We'll see you again very soon.